All right, well, Happy New Year, everybody, and welcome. This is John Locke from the Locke in Your Success, and welcome to the first weekly trade and market update for 2014. All I can tell you is I am extremely pumped about 2014. We're looking at a condition where the market was just crazy bullish in 2013, and it leaves us set up for a nice period of sideways or even maybe a little bit down movement in the markets, as long as we don't get any kind of a market crash. Looking at very possibly a very, very good year this year. So I'm just really looking forward to that. So before we get going, let's kind of get moving. I'd just like to remind you that any information in the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making specific trade recommendations. Also, any results or trades covered in the presentation may or may not be from live trades. In the event something is actually computer simulated, we do the best we possibly can to make sure it's as accurately represented as possible. And also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And if you're watching this on YouTube, come on over, visit our website. We have lots of great programs at lockeinyoursuccess.com. And also join our mailing list so that you can get invited to these webinars, as well as the free report, 7 Secrets to Becoming a Successful Trader. And always keep an eye out for what we have coming out for new programs and so forth. Okay, let's take a look at the markets here. We had last week talked about the fact we'd probably get an up move coming into the new year, and then we're bearish after that. What we ended up getting is we did get a bit of more of a sideways move coming into our new year, and then we actually got a down move New Year's, the first trading day of the year. So that was a little bit unexpected. We've had since 2008. That was the last time we had a down move. Every other year since then has been an up move coming into the new year. As far as for whether this means anything or not, we never know for sure, but what I can tell you is the last 2 times we had a significant down move, first trading day of the year, were 2005 and 2008. And both of those years, January was pretty ugly. So if that's any indication, then it may be kind of a rough month to the downside, but we'll have to wait and see because we just don't know. Nothing's ever positive. But as far as for what I'm thinking coming into the next several weeks, we'll start with the SPX here. I'm still thinking the SPX ends up expiration down near the 1800 level. So in short, we're bearish. However, keeping in mind that before we get there, we may see some sideways movement. So it's hard to tell when the market's going to drop out, but I would expect the market to run a little bit sideways and then drop out here. The Dow is pretty much confirming the same thing. We're pretty much overextended. I'd expect, again, possibly some sideways movement in this range, but at some point before expiration, dropping down to the 16.2 level. And as far as the NASDAQ goes, this isn't as overextended. As a matter of fact, we're coming into our 20-day moving average here, which the index has been bouncing its 20-day moving average fairly regularly, but I don't think it's going to hold this time. I do think we're going to come down and test the previous upper trend channel for our previous trend here, which is at 3450 level. And as for what we're looking for the Russell short term, thinking the same thing. We run sideways and we pull down into our primary trend line at a minimum of 1125. And longer term, I do think we're going to see this trend line down here on the Russell down around 1,000 over the next 3 months. But we'll wait and see if that happens. We'll have to see how we start reacting to the lower end of this trend channel. But at a minimum, we're going to touch that probably more than likely by expiration time. And if we go a little bit deeper, we'll probably be coming down to 1075. So that's pretty much what I'm thinking for market movements for the very short term and going forward maybe for the next month or two. I would not expect that we go a whole lot higher here. Can we break out a little higher? Sure. I mean, it's always possible we hold the trend channel, but as far as my thoughts, I'm looking for the chart patterns to start breaking down and coming into sideways. If they don't, every time they go up, like I said, we are more and more opportunity to start to get bearish on the markets because we are overextended in general. All right, so that's what I'm thinking of the markets. Let's take a look at our trades. Not a whole lot of action last week. We didn't get a lot of movement, but we'll go over where we're standing. This is the January V Condor. I'm short the 1200s. I'm short the 1020s. The only thing I did during the week, let me just put this in BackTrader so that we have an idea what we looked like when the market was open. And I'll go to 3:30 on Friday. And the only thing I did to this all week is on Thursday when the market started backing off, I had my straddle at 11:10, and I didn't want the market to back. If you look at the analyzed graph, the way it is now, I had the deep V down here all the way down to 0. I didn't want the market backing into this, especially since I was a little bit bearish on the market and losing all my profits. So what I did is I turned that straddle into a strangle. I widened it out to 1140 and 1080. And as I can, I'll probably continue to widen this out as the market, if it creeps down at all. So, but as far as this goes now, we are sitting here up. Oh, I look like this wants to update. But if we're looking at numbers, aftermarket numbers, we're looking at a gain of about $4,000 here, which is a little bit more than normal on a V Condor. We should be able to hold this gain and maybe make it a little bit better. Sometimes these make as much as $10,000 if things go really well. I wouldn't expect that this month, but I would expect better than 3. So this is looking perfectly fine. As far as the ROCK trade goes, and like I said, the January trade's got a little bit of movement, but the February's didn't get much at all. As far as the ROCK trades go, if we can come back to Monday and get this thing to actually update, doesn't look like it wants to. So what I'm just going to do is I'll just kind of go over what happened. Let me move to, let's see if it'll update to Tuesday. We'll give it one more shot. I'm going to close this down. I apologize. We have our friend Option View, which we know never breaks down. It's very useful software, but it can be a pain in the neck sometimes. Let's see if we can bring this back to Monday. Oh, that's better. Okay. So here we are with Option View, and on Monday, let's see what days I actually did something here. Okay, so I didn't do anything on Monday. This is what we did coming into the week. This is what we look like here. We were 2/3 scaled in, and we're scaling into our last third. On Tuesday, the market continued to creep up, so I ended up adding in 3 more of these 1190 butterflies. So if you come to the end of the day Tuesday, you can see where we were standing. I added 3 more of these 1190s, so I ended up having 6 of these. And if you see on the T-log on the 31st, we added them right here towards the middle of the day. But of course on Thursday, the market had a significant drop, and we don't, with this trade here, we don't allow it to go very positive delta. So that being the case, what happened is we ended up selling back out of these and more. So I ended up selling out of a total of 5 of these 1190s. So by the end of the day Thursday, you can see we took some of these 1190s out, and we're back down to 1 1190 butterfly. And then on Friday, there weren't any more further adjustments needing. So if you're looking at Friday at 3:30, here's what the position looked like. Data's kind of coming in now. We're getting close to expiration. The market's getting flat, so values come into this pretty quickly. So as of Friday, we're up around $1,200. And the position looked like this here. So we're almost back into 2/3. If we get a hard down move, we'll be kicking back into cat position here. If the market grinds back up, we'll be scaling back into these. So this is a matter of just the market swinging back and forth and adjusting and staying with the market into expiration. And that would be the ROCK trade. The January Bearish Butterfly, of course, has been closed. It was closed earlier. The January M3 trade didn't get anything except for a minor delta correction on Friday. So at the end of the day, I bought 3 of these, or sold, I should say, 3 of these 1150, 1160 put verticals just to get our delta down under 100. Without this, it was here. This was our position as of last week. It would have looked like this. We would have been down about minus 118 delta. The analyzed graph is putting us right here, which I'm not really concerned too much about the delta being a little bit steep because I'm still well inside the tent here, but I am exceeding my maximum delta range I like for the trade, which would be minus 100. So I went in here and I did this vertical, and just a very minor adjustment to bring our delta down. If the market continues up today, it will get more of that. So this is what the position looks like as of close on Friday. And that is it for the January trades. If we take a look at our February trades, neither one of them had any adjustments, so we'll just kind of show you what they were. We have, no, I don't want to close this. We have our February V Condor, which is basically at break even. If we bring this out, here is what that position looks like. We are short the 1050s, short the 1220s, and we have our straddle in here at 1140, and this is looking perfectly fine. And if we look at our bearish butterfly for February, I really actually like the looks of this. We are 2/3 scaled in. It's actually down a little bit of money, but given the market opinion that I have, this is a really nice setup for us if we do scale back into this area here towards in the next couple of weeks. Then we'll give us a good chance to be up some money here for a while. So that's all I have for the trades on that are open. Going forward with the market conditions, I do like the trades coming into March, but we still have another 20 days before we get into those, so it's a little early to start talking about that. We'll have to see where we are when the time comes. All right, so that's what I have. Does anybody have any questions with anything that they'd like to go over? The V Condor works perfectly fine on the SPX. You just you could run 10 delta, and that works fine. It's a little tough on the NASDAQ. The NASDAQ runs a little bit too much, but as far as SPX, it's great. You use the same delta numbers, and you can use 30. I mean, you can go a little bit wider with the wings if you want to. You could probably run, because the price is a little bit higher, you probably run 50 points. And just put a V in there. What you do is you just balance the contracts out so the V touches your 0 line. So if I was going to run to an SPX, if I was going to set up a V Condor for an SPX here, let me just do this quickly. And if I went back, I'd still do 65 days or thereabouts. We'll see what how many days this puts us. All right, this puts us at, we'll just go to this date here. So if you did this and came in, and like I said, I mean, you can just design kind of stuff off the cuff this way too, but let's just try minus 15 with 30-point wings, and we'll see where that brings us. And you can just, and whatever you do, you just balance it off. So we'll just balance it off at, we'll just say 830. We'll just see what this looks like. Sorry, I don't want to go 830. I want to go 820. Let's look at an 820 straddle. 1820, I mean. Right, that puts us with something that looks like that. So see how the graph is a little bit too far down under. So to fix that, we can either go slightly wider on the wings. Sometimes that helps. Or we'll go a few less contracts. And doing this, you can pretty much set this up for anything you want. This gives us a little bit more negative delta. Let's see how, so something like that. Let's set up something like that. So you go 40-point wings. You put 15 to 1. If you wanted to go a little bit wider wings, you could maybe do a few less contracts. If you want to go narrower wings, you can do more contracts. and I'd set it something like that. Use probably the same delta numbers. So you go ahead and do that and back test it. All right, so let's see, next question. Oh, okay, where can I get, okay, let me go back. Is there a reason the V-Condor, okay, we answered that one. Next one here is, did I say trades for March, or did you mean February trades? Well, I think things are looking really good for February. I think it's a little bit early for March because we still have a lot of days left before we enter. That's all I meant. So anything we talked about, I think February trades look nice. I'm sure March trades will look good too. Where can I get materials on V-Condor and entry and adjustment? Basically, David, email me and I can give you that. I don't have anything written down that's publicly available right now. I will have that. I will have that information public when we do the SSS trading system. Everything's going to be explained in there. And what I usually do with as far as V-Condor, if you want to do one session with me, I can come in and I can explain that trade completely and go over an example, or maybe 2 or 3 in one session, one training session with you, and you'll know everything you need to know about it. So that's probably the best route for that. And do I do calendars? I personally don't trade a whole lot of calendars. I have several students who trade calendars, and I coach people who trade calendars. I know a lot about calendars and what you need to look out for. And like I said, I do have people who aggressively trade and like calendars. I don't personally like calendars because I don't like to not know what my value is at expiration. The thing is, with a calendar, the expiration lines move around. I don't personally like trading when I don't know that. So that's one of the things that I have. Is so when you're dealing with diagonals and calendars, you get that. Yeah, I mean, I can present and teach calendars. That's not really an issue. So we can do that. Bearish calendar for February. Yeah, I mean, I think anything you do in February, if you lean in, I mean, and this is my opinion. I mean, of course, the market can continue to keep on its path and be completely irrational, but we have hit some longer-term price targets in all the indices that are basically telling us that the market is very, very likely to at least flatten out. So anything bearish or that takes on a little bit of upside risk, I'd probably be in favor of February and March, unless the market really retraces a lot. And I mean, longer term, we're still bullish. I still think the Russell's going to 1350, and it very well may happen this year, but I just don't think it's going to happen in the first 3 months of this year. I'm a little bit more sideways, intermediate term, long-term bullish, short-term bearish. So yeah, if you want to do anything bearish for February, I think that is a decent bet. For the odds are the market's probably not going to go a whole lot higher. So anything that's going to take advantage of a sideways or bearish market should be good. Let's see, what else do we have? All right, just one more question at this point is, can I do a bullish butterfly? And my answer is sure. I mean, why can't you do a bullish butterfly? My biggest thing with this type of question, though, is, and a lot of times with trade questions, like can I do a calendar, can I do this, can I do that? I mean, you can do anything, right? The bigger issue is, what are you really asking me? I mean, are you really asking me, is a bullish butterfly going to win in all scenarios? You know, of course, a bullish butterfly, if you come in here and the market goes up and it doesn't go up too much, then you're going to do very, very well. You know, a year like last year where the market was just pretty much consistently up, you didn't have a whole lot of downside risk. You come in with a bullishly positioned trade, you're going to do well. If your question is a bullish butterfly over time going to do better than a bearish butterfly, or is a bullish butterfly going to work in more market situations than a bearish butterfly, the answer would be no. I haven't found a way to take a bullishly positioned butterfly and cover the number of possible market scenarios that a bearish butterfly is going to handle. Another thing, too, is if you want to do a bullishly positioned butterfly, usually scaling in backwards is a bad idea unless we're in a very, very sideways or a mildly dropping market. So if you're in a mildly dropping market, scaling in backwards is probably okay, but in general I do not like to scale in backwards, especially in a bullish market, because if you put a bullishly positioned butterfly on and you try to cover yourself by scaling backwards, the rallies tend to be really vicious and they're going to blow right through the whole butterfly position. So and I wouldn't want to do that. What I'd want to do is just do a bullishly positioned butterfly, and if you're wrong, you're wrong. Possibly roll it back a little bit if you'd like to and maintain your bullish stance, and then scale in when the market goes up in front of the market. So, you know, for example, if I was going to do a bullishly positioned butterfly for February, and I want to run, actually, let's just say for January and I wanted to do the 56 days, then I would come in somewhere around the middle of November on a Friday. I'm just going to change the account so I don't screw things up with the accounts I have open. So if I was going to do a bullishly positioned butterfly, I'd come in 56 days here, and I'd probably want to look at the Russell. This can be done on the SPX too, by the way. We need to widen your adjustment points a little bit. So if you're doing a bearish butterfly in the SPX, I like to see the wings a little wider, and I like to see the roll-in points or the add-in points not 20 points apart, but more 30 or 40 points apart. And it tends to work very well on that. If you try and keep them that close with the price of the index, you do have issues with that. And to be quite honest with you too, the Russell's getting to the point where the prices are high enough where we may start going 60-point wings, 30-point add-ins. In which case we're going to have overlapping strikes. That's going to cause issues on its own. But we'll talk about that with an update to the Bearish Butterfly program at some point if the market hangs at this level or higher. So if I come in here and I go to just this account here. Let me clean this out. So I'll come to November 20-something. Let's go here. All right, so here we are, about 56 days. We'll update. Let's cancel that. Well, if Option View is going to have trouble updating, we may have to scrap this for now. But let's see if we can get this to update. Close back trader, we'll come back in. All right, so anyway, if you're going to do a bullish butterfly, what I would do with this is I would set up something 20 points in front of the market. So if the market was at 1120, for example, then I would come in and enter a butterfly at 1140, and I wouldn't let the price exceed the strikes. So if you come in, you enter an 1120 butterfly, the market's at 1120, you enter an 1140 butterfly. If the market goes to 1140, you just add in a 1160. If it goes to 1160, you add in 1180. If it continues to rise, you just start to roll them. I would kind of ignore my negative delta to the upside, because by the time you hit your following strikes, you would just start rolling the butterflies, and I wouldn't worry about the negative delta, because at that point you're so overextended the market's likely to stop and at least pull back a little bit. So that type of a thing does tend to work well in these uptrending markets. It's not as resilient to a down market, and it's more likely to get whipsawed, but it does work fairly well for a market like this year. I've had some people trading that way, and I've had a friend who's been trading that way for years. The downside to that, of course, is it doesn't win as often, and it doesn't handle the down moves quite as well. So of course you have a bad down move, you're going to lose. So everything is relative, and it's just a matter of matching the things to what you want to do. But yes, you can do a bullish butterfly. Maybe we'll come out with a little mini program on how to do that at some point. But it can be done. And whatever you do, if you want to do something new to see what happens, back test it thoroughly and just kind of go from there. So that's all I have. If there are no other questions, I guess we've run up about a half an hour here, and we're going to close things up for the week. So thank you for attending, everybody. Oh, hold on a second. Do I do calendar? Okay, no, all set. I think I did all the questions. So have a great week, everybody, and I look forward to seeing you next week. Thank you, and have a great day.